Here's the chart of silver, spot silver on the weekly scale, with the weakness that we have now examined seeping into the dollar index, and many pairs are perking up, looking up. It is time to prepare for a possible rebound in the precious metals. I do not know at this point in time how far the precious metals are going to run, but they're going to run probably for quite a bit of time. We have here silver showing us on the weekly scale most likely a bottom to a 5-wave run that began here. Let me see if I can open it a bit so you have it even clearer. Okay, that's better. So suppose we have this as 1, 2, 3, 4, 5 seems to me quite sensible. It took the stops, avoided the very critical line that I have here, and rebounded. Now if the strength continues, we're going to have a move that would relate easily to this. Well, it looks obvious, yeah? You had an 1, 2, 3, 4, 5, so a correction that starts relates at least to this. Now we can enter a debate that can take quite a bit of time, whether we are dealing with a 1, 2 here, and that's going to be a third wave, and we're going to have a fourth wave that would last easily 4 to 6 weeks. If that is the case, it's going to be confined easily to the range between the low registered here and not much more than 15.5 in my opinion. Yeah, it's not going to reach 16. If it does reach 16, then you know that it's not a 1, 2, 3. Okay, 1, 2, 3. It's not. Okay, it's something else. We will examine that as and if it occurs. And there is one reading for silver that is a little bit, if you like, some would like to use the word extreme, but technically it's possible. It's possible. What is it? Well, it's possible. This is an A, and that's a B complete, and in fact silver is going down. Do you see? Silver is going to create an ABC. Because in the case of silver, we can't talk about a triangle. It's not like in the case of gold, you will see it is still tenable. It's an idea that is perfectly okay. Here we can't do that. We can't say A, B, C, D. No. It doesn't look right. It just doesn't look right. It looks actually like we had a triangle in the middle here. It came down, did create a triangle in the middle here, and then came down again and created, give us 5-leg run. So that could be a perfect A, B, C that created the B. Okay, don't get confused. That's a big A, that's a big B going up in a C, topping above the level registered here to complete the C, yeah, and then big down. Okay, but I tell you, this is extreme reading. I'm not adopting at this point this reading. I'm more looking towards rally in this zone, and we'll see how it develops. Let's take it step by step. Why not? I think that's the best way of doing it at this point. That's the daily. That's 1, 2, that's 3, that's 4, that's 5. If I'm right, first target confirmation that a big correction is underway is going to be a rally above 14.92 right here. It appears to be underway. Let's have a look at the 60 minutes. Several ways are possible to subdivide this. We could be looking at a 1, 2, perhaps another 1, 2 here. Okay. In short, I think silver is likely to continue higher. Here's gold. That's the daily. Gold is also likely to continue higher. We are looking now at, I would say, 2 possible alternatives. One is the same idea of that triangle. You remember we had this as an A, that's a B, that's a C, that's a D, and we thought the E leg might have ended here, and it's coming down crushing in a C, in that big C. I think so. Gold is going for another run. It could be indeed that it's going to create another ABC, as simple as that. That in fact what we have seen here is an ABC, but that was an X. Okay, so we're going for another lot of ABC like that, and the big triangle with the E leg, instead of having terminated here, will terminate somewhere here. Okay, obviously that's going to chew up more time, and in a way it's going to be on a scale that is comparable to the length of time that the previous legs in this triangle took, because this was very brief, both in terms of price and in terms of price it was fairly short, and in terms of time it was quite brief. So giving us another ABC would just, if you like, balance the picture fairly well. So you'll have an A, B, C, D, E complete, and then gold could be ready for that very big plunge. So naturally, I do not assume that gold is going to challenge the previous high here, and that extreme reading that I applied in the case of silver is not so easily applicable here. How I'm going to apply it? We don't have at all the same structure, but naturally, if silver is going for that extreme run, this one will definitely run about 1380, and there is perhaps a pattern here that escaped me. But at this point in time, I would stay with this reading. Okay, now the alternative is that the second wave is underway, the second wave to the slide that we have seen here, which was taken as the first leg, and the B, that B in black, you remember we said possible big B ends here. That gives us the idea that we could be working with one, and that would be a second wave extending, which is perfectly acceptable. So these two readings obviously are short-term bullish for gold, but longer term, as you can see, they're only a preparation for a much bigger collapse in the price of gold. Let's have a look now at 60 minutes scale. 60 minute scale right from the bottom, we have assumed that turned out into an ABC. It's heading higher. That could play out as a 1, 2, 3, 4. It has further run short term. That will complete first leg up. That could be either an A or 1, and I would expect after some consolidation, I would expect it to continue higher. I'm wrong, and something else completely is taking place if it manages to come back all the way down there. Okay, so I do not really forecast that in for one day trading session. No, I would be very shocked if that happens. But if it does happen over several trading days and it does break through this level, then doom and gloom will definitely be re-established here in the case of gold, and it would indicate lot lower lows on the horizon for this one.